Hello, and welcome back to Happy Time, Happy Money podcast with Victoria Miracle. And today we have Michelle Hung. She's an author and founder of the Sassy Investor. She has taught thousands of students and clients how to invest in the stock market and build long-term wealth. She graduated from the University of Waterloo with a math degree, majoring in finance, and is also a CPA charter holder, a globally recognized investment management designation. Prior to study Sassy Investor, Michelle spent over 7 years working in investment banking and venture capital in Toronto. Wow. Hi, and welcome, Michelle.
Hi, Victoria. Thank you so much for having me here. I'm super excited to be here to share some knowledge and, basically spread the wealth of knowledge.
Yeah, well, we're all excited to hear more about stocks and investments. It's always so interesting, right? But before that, I would love for you to share how you got into that and like what inspired you to do it.
Absolutely. Well, basically, I've been working in finance pretty much forever. Like I studied finance, and straight out of school, I started working in investment banking and then venture capital. And I realized one of the most common questions I was always getting asked was, what should I invest in?
Which stock
And
should
for
I
the most
invest
part,
in?
as I was,
I think it's like which
what
stock
should
I
I
should
invest
invest
in?
in. Which stock I should
Yeah.
invest in. Yeah.
Yeah, same thing. What stock is good? What's good out there? And I brush people off. I'm like, I don't know, you figure it out yourself. Meanwhile, I'm investing in I'm building my portfolio, and I'm like, you know what? I can't really talk about this because of the nature of what I was doing, and mostly because I didn't have time, right? But after I was laid off from my job, after like almost 7 years working full time, I had, like a lot of life-changing events happened. But basically, I was just so glad that I amassed a six-figure investment portfolio. So I had no job. My 12-year relationship had actually just ended. So it's pretty much divorced. So then I had to move back home with my parents. So all these life events were happening. And then my dog fell really sick. So then I had to take him, take him to the vet. So it's in and out of the vet's office. And so it was just really like low times. And at least the one thing I didn't have to worry about was money. I didn't have to worry about not being able to pay for the vet bills. I eventually had to move back home with my parents, which is okay because, I was living with my boyfriend at the time. But I wasn't in a rush to get a job, to be settling for something I didn't want. I was able to take the time to basically reset my life and start and just figure out what I wanted to do basically in the next phase of my life. And one of the things I've always wanted to do was start a business. And it just came to me where I figured I should just teach people how to invest. It's one of the most a very common question I've been asked. And most people don't know, a lot of people don't know how to invest. So I actually started off wanting to teach people how to pick stocks. And then I figured, okay, most people should not be picking their own stocks at first, but at the very bare minimum, instead of having money sitting in a savings account, which I found a lot of women had, what is the bare minimum they should be doing to put their money to work? And that's basically how the Sassy Investor got started. So a combination, I knew there was a need out there, but also from my own personal experience, I certainly didn't want, I want women to have financial independence, to be able to rely on themselves, not have to settle for something they don't want, a job that they don't want to be in, certainly not being in a crappy relationship and feeling that they need to stick around. So, my mission was to just teach as many people, as many women as possible to build a lifetime of wealth, how to teach them how to build financial independence.
That is a beautiful vision. And I mean, I have so many questions. So you mentioned that people don't get to choose their own stocks at first. Why did you say so? So why then?
Well,
Some people just say like, you get to pick one. Okay, I'll just tell you what I think because I guess I get to put some thought into it. So a lot of financial advisors also say, just pick a company that you know and start investing in it. And you're saying they probably don't get to choose their own stocks first. So what's the balance here?
Yeah, I always say you shouldn't be picking your own stocks at first, right? At the bare minimum, do something else first. But the reason I say don't pick your own stocks first is because people will tend to, they'll follow news and what's hot. So if you remember GameStop or like AMC, Dogecoin even, or Bitcoin, if people were to pick if you told someone, oh, pick something that you're familiar with, and they're like, well, I heard of GameStop, and I'll be like, no, like there are better companies out there. For the stock picking process, it is a process. There's a little bit more work involved. You have to research the company, what they do, how they make money, making sure they're going to stick around for the next 10, 20, 50 years. We're talking about long-term investing here. The longevity of the company matters, making sure they're not going to just die off in the next couple of years because it's just a company that's so short-lived, that's a fad, and certainly avoiding things where, GameStop and AMC, where like people on Reddit were hyping it up and driving up the prices of the stock so that it becomes super overvalued. And then when people buy in, they buy in at the highest peak, at the highest point, the stock drops, and then they never end up recovering their money. Like if they recover, or they sell and it ends up being a permanent loss. So that's why I say avoid that stuff first, because with individual stocks, you run the risk of it going to zero.
Yeah. Oh, you don't
Whereas,
want to buy high. I know, investors always say buy
yes,
low, sell high. I mean, it sounds so
exactly.
obvious, but it's like opposite psychology. When we look at the stock and it's growing, like, oh, it's going to grow. It's a great stock. But then there's always goes down after it's really high up. So what are the best
Exactly.
investments for somebody that like has, no idea on what is going on and they would love to start?
So what I always recommend to everyone is build your portfolio, your core portfolio, around exchange traded funds. So ETFs for short. So basically what they are, it's a fund. So it's just like a pool of investments that have multiple companies, like hundreds, thousands of companies, so that you gain exposure to many, many companies across various industries. So not just tech stocks. A lot of people are always gravitating towards, Facebook and Netflix and Shopify and Tesla, all like those sexy technology stocks that are, doing so well and everyone has heard of. You need a variety like utilities, consumer staples, consumer discretionary, financials, and then not just having a variety of industries in your portfolio, it's of various sizes as well, right? Because you want to make sure you have small, medium, large companies. The large companies are more stable. They're less likely to go to zero. The small companies are the ones that'll take off. Like maybe they're, at a $2 billion stage right now, they're valued at $2 billion, maybe they can go to 20 billion. So it just covers everything, and making sure that your money will not go to zero. Even if, 5 or 10 companies go bankrupt, you're still good. So it's much less volatile compared to investing in individual stocks. And the beauty of these ETFs is that some of them are priced very low in the sense that like the dollar value. So for example, there are ETFs that can be $30 or $40 a unit, whereas, a company like Apple or Tesla, they're like over $100, a couple $100, like Google, Alphabet's like in the thousands, which is out of reach for a lot of people if they're starting out. So people starting off with like $100, $500, their money can go a long way, making sure they're covered across various industries, many companies across the board. And so basically ensuring that their money does not go to zero.
Yeah, beautiful. Thank you. And the last question I have for everybody on this podcast is please finish this sentence. If you really knew me, you will know that I am blank.
Sorry, can you repeat that?
If you really knew me, you will know that I am blank.
Really, if you really knew me, you would know that I am, oh my gosh. There's a word, it's coming to me. I can't. I am lighthearted.
Oh, okay.
Yeah,
Love it. All right.
light.
Well, thank you. Well, I know everything you shared is so valuable, and I know you have an amazing, amazing free masterclass to share more about your free gift that you have for our audience today.
Absolutely. So there's a free masterclass. It's called How to Build Your Six-Figure Investment Portfolio Using the Proven and Best Strategy. So it has a lot of golden nuggets in that masterclass. You'll know more about investing than the average person after you watch it and attend it. It's really valuable. It's packed with lots of information, lots of good stuff for you to take away from, especially for if you're starting out with investing. It's great for beginners.
Beautiful. Thank you so much. And you, as always, can find this on our episode page. Just it's happymoney.com/episode and the number of this episode in the number form. Or you can just scroll down. It's going to be a link there. So just click there and you'll find all the links that we mentioned and all the contact information as well for you to connect and share any feedback or any thoughts. Please do rate, review, and like or subscribe, whatever you're watching or listening this to. It will warm our hearts. That's why we're doing this for you. And thank you so much, Michelle, for coming. And thank you, everybody, for listening or watching. And I'll see you in the next episode. Bye.
Thank you. Bye.